Choosing the right cash management option, a guide for investors across life stages. When it comes to parking cash reserves, investors have several options to consider, including certificates of deposit, CDs, money market funds, and high-yield savings accounts. CD, certificate of deposit. Think of a CD like a timed competition. You deposit your money for a set amount of time, like 6 months or a year, and you agree not to touch it. In exchange for being patient, the bank rewards you with a higher interest rate than a regular savings account. But if you need the money early, it's like breaking the competition rules. You might get a penalty, lose some interest. High-yield savings account. This is like a regular savings account on steroids. It offers a higher interest rate than a typical savings account, but it might also have a minimum balance you need to keep in there to get that higher rate. You can access your money anytime, just like a regular savings account. Money market fund. This is different from a money market account. This isn't exactly a bank account, but it's a place to invest your money. Imagine a pool of money from many people, all looking for a bit of growth. This pool is invested in super safe stuff, like short-term loans to businesses. The money might grow a little bit, but not as much as riskier investments. You can usually withdraw your money anytime, but the value of your investment could go up or down a little. Here's a quick cheat sheet to remember. CDs. High interest, but locked in for a set time. High yield savings. Easier access, higher interest than regular savings. Money market funds. Invest for a little growth, access your money anytime, but value can fluctuate. When deciding which one is right for you, the decision-making process varies depending on factors such as risk tolerance, investment goals, and life stage. Let's delve into the considerations for each investor profile. 1. New investors. Decision-making process. Risk tolerance. New investors typically have a lower risk tolerance and may prioritize safety and liquidity. Investment horizon. Short-term goals may dictate the need for accessible funds without penalties. Interest rates. Comparing yields and introductory rates can help maximize returns on cash balances. Choice consideration. High-yield savings accounts offer competitive interest rates with easy access to funds, suitable for short-term savings goals and emergency funds. 2. Experienced investors. Decision-making process. Diversification. Experienced investors may seek to diversify cash holdings across different vehicles. Yield optimization. Balancing risk and return becomes crucial, with a focus on maximizing yields without compromising liquidity. Tax efficiency. Consideration of tax implications can further enhance after-tax returns. Choice consideration. Money market funds provide liquidity and potentially higher yields than traditional savings accounts, suitable for investors seeking slightly higher returns while maintaining flexibility. 3. Investors aiming for early retirement. Decision-making process. Income generation. Investors aiming for early retirement may prioritize income generation and capital preservation. Stability. Safety of principal becomes paramount, with a focus on minimizing volatility. Tax-efficient strategies. Utilizing tax-advantaged accounts or instruments can enhance after-tax returns. Choice consideration. Certificates of deposit, CDs, offer fixed interest rates and FDIC insurance, ideal for preserving capital and generating predictable income for specific financial goals or future expenses. 4. Investors nearing retirement. Decision-making process. Capital preservation. Nearing retirement, investors may prioritize capital preservation and steady income streams. Risk mitigation. Preference for low-risk options to safeguard against market volatility and economic uncertainties. Liquidity needs. Balancing liquidity needs with income generation becomes critical. Choice consideration. Certificates of deposit, CDs, provide stability, predictable income, and FDIC insurance coverage, aligning with the conservative approach to wealth preservation often favored by retirees. Conclusion. The decision-making process when choosing between CDs, money market funds, and high-yield savings accounts evolves across different life stages and investor profiles. While new investors may prioritize accessibility and yield, experienced investors focus on diversification and optimization. Investors aiming for early retirement may emphasize income generation, while those nearing retirement prioritize capital preservation and stability. By understanding these nuances and aligning cash management choices with individual goals and risk tolerance, investors can effectively manage their cash reserves and navigate market fluctuations with confidence. It is essential to regularly reassess investment strategies and adjust allocations as financial goals evolve over time.